Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the weekly time frame. And we are looking back at 2023, February 2023 to be exact, where we had, remember we're on the weekly, we have a bullish divergence here. Very, very slight. As you can see, the lows on the RSI, this second low is just slightly lower, but even if it were equal, it'd still be bullish divergence. But regardless, there it is. And then you see what happened the next week. Let's just see, let's just measure that for the hell of it. For the hell of it. We had about a 27, 28% pump the next week. And that was just two years ago. 2 years ago in the beginning of the year, just like we are in right now. And we'll go over this a little bit more later on as we compare these oscillators and stuff to where we're at today. But I wanted to dispel some of the FUD that's going out there. And I'm really kind of pissed off. You got to be smart when you watch these people on YouTube like me and others, because we're just a bunch of idiots. They're all a bunch of idiots. And I try not to just repeat the narrative on whatever's out there. I try to think about, actually think about, what's going on and question everything like, anyway, like you're supposed to. But you hear these people just going on and on about the gap, about the U.S. government selling Bitcoin, about this, and the latest FUD, and they just spew it, and they just repeat these things over and over without actually even thinking about it. So first of all, let's talk about these gaps that get filled, or that are these gaps that get formed, and apparently there's some urgency to fill them. So here we are on the Bitcoin CME futures chart. And back in November, we formed this gap. Well, yeah, this is the gap from the election. I remember this well, actually. It's that Sunday I thought we would come back down before coming back up, and we didn't. We just kept going. And we formed this gap between 77.5 and about 81. And everybody keeps talking, oh, we got to come down and fill that gap. We're going to come down and fill that gap. Here we are, way up here in 90 land, and we're just going to come back down and fill this gap all the way down like this. No, that's a bunch of bullshit. And let's look at a different chart, because I made a video about this about a year and a half ago in October of 2023, talking about, because I was sick and tired of hearing it then. And we form gaps all the time. This is looking at less. Let's make this bigger here. So it's going to turn sideways here. But this is looking at last cycle over here. These until... that's, I guess if I touch it, I'm going to start talking. This is my video that we're looking at from last year. Let me see if I can find what chart this is. Oh, it's my unnamed chart. Okay, hold on a second. I'm just going to go to the chart. Oh, I got to turn... Wait, hold on a second. I don't know what's going on here. All right, I got the chart. So this is from the chart from the video I made a year and a half ago discussing all these gaps, and we are looking at August, July 2020. We formed this gap at around $9,000, between $9,000 and $10,000, $250 gap. I was speaking with a friend of mine recently, and She remembers, she was around last cycle, and she remembers how they were just kept talking about this gap down at 9,000 over and over, that we were going to come down and fill this gap. And we came down here to it, and we didn't even, we just came down to it. We barely got into it. And they talked about this gap for like ever, she said, on and on and on throughout the whole cycle. Well, after that, we formed another $20 gap right here. And all these gaps that I'm pointing out, okay, mind you, this $250 gap right here, although they came into it a little bit, has never been filled and never will be filled to this day. Nor has this one. It's only $20, but still. Here's one up around 18,000. Formed this gap right here. $600 gap right there. That remained unfilled throughout the bull cycle. What happened after that? We went up, 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 never came back down and filled it. Here again, a bigger one in December of 2020. Nice big gap, up, up, up. I'm sure people got FUD'd out like they are right now. And everybody's saying, oh, we're going to go down and fill the gap. We're going to go down and fill the gap. And I'm sure they were talking about CPI data and the government selling Bitcoin and whatever, trying to scare the market down as far as they can. Did we come down and fill the gap? No, we didn't. But they tried to get us down there, and they tried to scare everybody into thinking, oh, we're going to go all the way down here. All the way down. We're going to go all the way down, back down to 24,000. And how far did they get? 29,000. Mind you, from 40, but still. Gap remained unfilled. And then we have a couple more up here on the way up that ended up getting filled right away because that was the top of the market. We came back down. Now these other ones, there was no rush to fill these, but they eventually did get filled in the next bear market a year and a half later. Okay. So see, they remained unfilled until a year and a half later, we came all the way back down here. Now this one, on the way down, we formed a gap. Maybe people were talking about it here, saying, oh, we got to go back up and fill the gap. Maybe that's what added to this bull rally here, this dead cat bounce thing. But we eventually did fill that here. So eventually, yeah, they do get filled, just by the natural course of the market. But here you can see I have all these gaps. Oh, so we have one here down at 20,000. Okay, yeah. So we did have one at 20,000 right there in March of 23. Wait a second, what the hell's going on? Did that not get filled? Oh. Well, look at that. There's one that's not filled. Of course, if I watched my video, I probably would have known that. So we have a gap all the way down at 20,000. That's never going to be filled. Between 20 and 21,000 from March of 2023. That's never been filled. Here we had one that did get filled. There's one. I mean, there's more, but it's just easy to spot these ones where you can actually see the gap. And then here's the one everybody's talking about. This is not going to be filled. The reason this is here, and I discussed this with a friend of mine, but it's both of our beliefs, that this is here to FUD you, to give narrative to the bears to dump price and to create fear in the market. And it's going to stay like that. They put that there to use as FUD, to create FUD, I should say. And it's going to remain like that. We're not going to fill it. We're going to keep going up. They need that there because one thing to think about, where is this at? This is between, let's say 78,000. Let's multiply 78,000 by 3. You get 210, 234, about $234,000. Where do you think this cycle is going to go to? About $200,000, $250,000, $180,000, somewhere up there. And where is this gap? This gap is going to be next bear market's bottom. I don't think that. I don't think it's going to pull back. We're going to see like a 60% retracement from the highs of this cycle. But if we do, this might get filled then. But I don't believe it. I believe we're going to come all the way back down to this consolidation that we're forming right now. I think this is going to be next bear market's bottom, around 100,000. So no matter what government entities get in now, governments of the world, our government, our state governments, whatever funds get in right now, they're going to be safe because this will be the bottom of the bear market. They're not going to lose anything, I don't believe. And I don't believe they're going to allow that to happen. So this will be the bottom, but you're going to hear that we're going to go down here. Next, in 3 years, 2 years, whatever. You're going to hear, well, now we go back down and fill that gap. All right, so that's enough about gaps. I hope you got the point. The next thing I wanted to talk about is the government selling this Bitcoin, 65,000 Bitcoin. Government has 200,000 Bitcoin. The marshals, the federal marshals, which is controlled by the Department of Justice, whoever that group has 200,000 Bitcoin, roughly. The 65,000 Bitcoin was, I don't know exactly, but it was some sort of a court case that was trying to block them from selling that because it belonged to somebody else or something like that, whatever. All that happened recently was that their appeal was denied, therefore allowing the government to go forth in selling that, or giving them the right to sell that. Government has 130,000 Bitcoin aside from that 65,000. If they wanted to sell it, they could sell it anytime they want. This court case has no bearing on whether or not the government wants to sell, it can or will sell any Bitcoin or not. They can sell, they have a bunch of twice as much Bitcoin as what was discussed in this court case, and they could sell that anytime they want. As far as I know, there's no restrictions on it. And they haven't. If they wanted to, they could have. They could have in November. They could have the second Trump got elected, they could have. But they didn't, as far as I know. Now, aside from that, if this administration, Democratic administration, which lost in part due to the strong crypto lobbying, the strong crypto, what am I trying to say? Well, I got sidetracked for a minute, but anyway, the lobbying by the crypto community and their strong influence in this election. This is the first time a presidential candidate or multiple candidates have spoken at a Bitcoin conference, right? I think Harris bowed out, but wasn't, what's his name there too? Kennedy there too? I'm not sure. But anyway, regardless, if the Democrats, and that's this administration, sells any Bitcoin despite Trump, they'll never win an election again. So that's about it for the FUD that I wanted to talk about, but you just got to be smart when you hear these things. Think about them. Just don't fall for what everybody's spewing. Now I'm using a new chart that has a limited amount of lines, but it has these alert lines here that I can't really turn on and off. I mean, I could turn them on and off, but it's just a big pain in the ass. So just deal with it, I guess. And on this chart, we have we do have the channel. It's our most important channel in Bitcoin history, from which all parabolic bull rallies start. And we are trading within that channel, a little bit below it now. Also here we have note. We have this yellow line connecting the wick lows from October 10th and November 4th. Let's get rid of the data below there for now. We don't need it. So we connecting those wicks is the yellow line. And as you can see, we've breached that yellow line, that yellow trend line. Now, in and of itself, it's not the end of the world, but it, is cause for some concern. But I mean, is that trend line connecting those two wicks the be all end all? I mean, we have another one here that connects this one and this one. And if we did connect those, well, let's just do it. But it's really far away from where we're at now. We did just connect that and that one and extend it. Style extend. And let's change it from, let's just, oops, yeah, there we go, thickness, okay. If we did plot that one there, I mean, that's way over here. We're nowhere near it. Actually, what would that be? Is that anywhere around 77K? Close. It's pretty close. Let's see if I did draw that accurately. That is interesting. So, you got to think of everything. I mean, I'm not saying that there's no way in hell we're going to go down to 77. But I'm just saying it's not likely. It looks like I've drawn that pretty accurately there. So, well, even as that stands, if we dropped right down immediately, that would only be 80. We'd have to breach this to go all the way down to 77, and that would be like over here. Yeah, we'd have to breach that by a lot. So that's one more argument why I doubt we're going to do that. So back to this. While we have breached this yellow line here, that's connecting the candle wicks. However, if we connect, well, let's just do that with this green line for a second. Let's connect the candle bodies. That's pretty much the same as the wicks. So that would be even. That would block us from 77 even more so. You know what, let's just, well, I'll leave that green line there. Like I need more lines, right? So anyway, we were talking about the yellow line, wick to wick. But if you go body to body on the closes, candle closes, it's the red line. You can see here, I have this red line. Let's zoom in because I've drawn it very accurately because I didn't want to, from that candle body there. Now, be it that the candle following that does, the body of it does come in there, but the close is up here. So we're just talking about where the red candle closes, not the following start. So this candle body here, there. So I've connected those. And where are we with regards to that? Well, we close this candle body right on it, just a hair above it. And we've wicked right down to it, exactly right here with our current daily candle. Now our daily candle's at 93.9. Which is concerning that we're going down. Let's look on an hourly now, because, well, we're heading into the 3 o'clock hour. It's going to be the DXY is going to open up. I believe the DXY starts trading at 3, and the CME futures. So we got that going on, and then the end of the day and the end of the week is an hour and 7 minutes from now. So we're looking at the 5 minute now. Okay. So we have come down quite a bit in the last hour. Trading is picking up. Because what they're trying to do, they're trying to avoid the bearish divergence on the weekly, or the bullish divergence on the weekly. And the bears are trying really, really hard right now. And well, let's see what happens. Because I didn't show you that yet. I was talking about 2023. But right here, unless we close, and my stupid alert is in the way. Looks like we gotta close. Let's say 93,650. Let's open this up a little bit more, get more really accurate. Yeah. Oh, let's say 93,666. Yeah, let's just say 93,666. We have to close below that in order to negate the bullish divergence. And we're trying to. We only got about $240 to go. But what's really, really funny, this is so funny, these candles. I mean, when you watch this crap, and it's so funny, like this one right here, this 4-hour candle looks like a cross right there. It's green. It's green by $1.40. And at the last few minutes, actually the last minute of this trading session, of this 4-hour trading session, this was flipping red and green by about $1 or so. Back and forth, back and forth, back and forth. And then finally finished green by $1.40. It's so freaking hilarious that the whole 4-hour period is like determined by the last minute of trading. So that might be what it comes down to here. We'll just have to wait and see. But I think we're going to pull it off unless we got some really determined bears that just want to dump the hell out of everything. So in 4 minutes here, we're going to get the DXY opening up and CME futures and all that jazz. So here we are on the weekly looking at the bearish divergence that's forming. Hasn't formed yet and could be negated if we close below 93,666 or if next week we continue to go down. So this wouldn't even be confirmed until we close higher next week. So a whole week away. Which I believe there's a very good chance we do. There's a very good chance we pump next week. The other thing that I wanted to talk about is the CPI data. And conspiratorially, if you're trying to guess at what the CPI data might look like, and if you think that the government may fudge the numbers somehow, then albeit the Democratic-controlled government, which the bureaucracy is very largely comprised of that component of our political whatever. And being that their most hated opponent is going to be sworn in as president next week, they're going to want to paint a picture of handing him the most strongest economy, good-looking economy there could be, which would be a CPI that is declining slightly. A slightly declining CPI for this month would be what they would want to give him. They would not want to show that yes, inflation was creeping up before Trump got elected, before Trump got sworn in. They don't want that narrative out there. They want to show that it's declining. If that were the case, now I said right off the bat that was conspiratorial. Now we're $200 above where we need to close. And this is let's see what the hourly candles look like. So you know what? Let's go over the divergence here just for the hell of it. I don't know if it's going to play out or not, but looking at this, you can see that compared to 2023, not the RSI, but the stochastic indicator, and why are these things on? I don't think they should be on. There we go. Not the, but the stochastic indicator, stochastic RSI, and even this BBWP. Look at how they're coming. This is coming down here. They've all turning down. This one's hovering around the top of the range, just below the 70, yeah. Or is that 80? I think that's 80. Just below the 80 line there. And the BBWP has crossed below the moving average. The stochastic RSI is below the moving average, but just turning up right at the 50 level. And let's go back to 2023. Oops, where are we? We're on a weekly time frame, so we don't have to go back that far. Here we are. Same thing with these oscillators. The stochastic RSI is hovering around up here near the 70-80 level. And actually, here, it's below the moving average, just crossed down. And where is it? It's like 64. It's even a little bit lower than where it is now. But that's the same. This has turned down here. Did it cross below or not? Yep. The stochastic RSI has crossed below the moving average. The blue is below the red. However, it's up at the 80 level. But still, it is at the 80 level, and now we're at the 50 level. So we're at the same significant levels, but a little bit different. So this is, I guess, technically stronger. This would be stronger. But still, we are in the bullish control zone, currently above the 50, looking to turn up. And also, the BBWP has just crossed down, just like currently, up here in this area. So this is just crossed down, and we're not even below that line yet. Which means I guess we could go down a little further. But anyway, holy moly, look at this. Oh, it's 3 o'clock. And we're retracing. We're coming back up. Now we are $500 away from, yeah, I think we're going to close with bullish divergence. So I'm going to watch what I say here. So let's look at our other things now. Let's go to let's go to a 5-minute chart. Yeah, look at we're coming back up. And well, first of all, well, let's go to the let's turn off all those other indicators. We don't need them right now. So CME futures, of course, opened lower because we are much lower than the close on Friday. But heading up, we're starting to head upwards in the 5-minute chart. So now, note, we did form a gap. We have formed a gap. So we're going to have to close that gap, right? 95, and we opened at 94.3, so we got about a $300 gap there. Now let's look at DXY. But you got to watch when trading opens, because a lot of times they might want to fake you out one way or the other. But do note here, looking at this, that, and while it's early, I mean, we just opened, we're in 5 minutes in, futures did open, it's over 500, it's almost 600, no, it's about $500, about $500 higher than spot, which is more than it was last week. Last week in the dumpy parts, it was like 100 or 2 above spot. And then towards the end of the week, on Friday, it was getting up to $400. And now it's even a little bit more. But like I said, we just opened. So that futures is showing bullish signs there. Now, what's the DXY doing? The DXY looks like it's gaining a little bit, but it's not just like spiking upwards. Wait a second. Oh, we're in the second. There's around a 5-minute chart. Yeah, it closed last week at 109,640. So, oh yeah, it looks like we're making a little triangle there. We're oscillating still, not knowing what we're gonna do. Who knows? This may even come up here a little bit more. Let's get off the 5-minute chart. I'm wondering if it's going to consolidate more until, I'd imagine this is going to do some more consolidation until we get the CPI data on Wednesday. Just have to wait and see. Maybe it comes down and comes back up and then dumps after Wednesday. I don't know. Who knows? Who knows? Where is Wednesday? Now we get PPI on Tuesday, though. Right about here. So that might influence it. And then Wednesday off the screen, right? Wednesday over right around here, we get the CPI data. So I'm really zoomed in right now. Yeah, who knows? Maybe this even goes something like that. I don't know. Not really looking at that. We're focused on Bitcoin. So basically, we got to close. Just even if we came a hair below that dashed line, it's an alert line at 93.7. We'll have that. We'll have that divergence on the weekly. So, you know what? One more thing I wanted to show you, and it's really, really super boring, but if you ever wanted to look at this. So we're on the U.S. Bureau of Labor Statistics webpage, and we are looking at the CPI data, Consumer Price Index for all urban consumers. And I have different tables pulled up here. I have one, and you can format this any way you want with all sorts of, looking at all sorts of different data. I'm looking at what the just general overall stuff is here. This is for all items and seasonally adjusted, this table right here. And it has it for, I don't know, the past 10 years right here. I don't know how far back you can go. One thing I do want to point out here is, like here in 2018, this is the month changes right here, and this is the 12-month percent change. So what I wanted to point out here was, like, even in 2018, right here before COVID, like we went in April from 2.5, or March from 2.3 to 2.5 to 2.8 in May. So if that happened right now, people would be freaking out. Be, inflation's coming back. It's going to go to 10% and the economy's going to crash and recession and whatever. The world's coming to an end and all the economies of the world are going to collapse. No, we went up to 2.9 in July and then back down to 2.6, 2.3, 2.5, 2.1. By the end of the year, we were back down at 2. So these things go up and down. Now you'll notice a lot of 1 point somethings all over this chart. And mind you, we were, past decade or so has been really, really good. We've been a really, really good economy. You know, I grew up in the 80s and I was a little boy in the 80s. Young, I wasn't a little boy. I was a little boy in the 70s. I was in high school in the 80s. But, yeah, those were hard times. I mean, I had a paper out. I did all sorts of stuff. I worked when I was 16. I guess a lot of kids do. But and out of high school, I had 3 jobs. I worked 80 hours a week. Literally, I had 2 jobs. I worked at KFC and Denny's, full time at both. And there would be days that I'd work 12 to 9 at Kentucky Fried Chicken, and then I'd have to go to Denny's from 11 to 7 in the morning, and then I'd have to be back at KFC at 9 to 4 the next day. So I'd work 3 shifts in a row with just a couple hours in between, just barely time to shower and change and go to the next job. And yeah, and that would happen multiple times a week. So it was crazy ass times. And then even later on in the later 80s, and then I was in my early 20s, I remember I had 3 jobs. I worked putting in kitchen cabinets during the day. I'd I'd work as an attendant at a gas station at night, and graveyard shift. It was an 8-hour shift. Now, not every day, mind you. And then I'd work at a rental yard on the weekends, 2 days a week. So I'd be doing my cabinet job during the week, Monday through Friday, have the rental job on the weekend, and then work at a gas station a few nights a week. That's, and then, during that time, you don't think you're going through hard times. You just think that's the way it is, and you get by. So anyway, that's that. A little blast from the past. And Anyway, you can look at these charts. You can look at these charts and you can see how it was really, really bad in 2021 and 2022. Look at that, 2022, it looks like we hit a peak of 9%. Wow. So anyway, what's happened recently here, we were at 3 in June, 3.3, 3.4. Look at that, 3.5 in March. And then 3.4, 3.3, 3.0. This is seasonally adjusted, mind you. So 2.9, 2.6, 2.4, 2.6, 2.7. So if we get 2.7, 2.6, 2.5, whatever, it's all in line there. So that's seasonally adjusted. That's not seasonally. Wait, those are seasonally adjusted. This is not seasonally adjusted, and it's for all items in the U.S. What were these numbers up here? See, these were 22223 was the last one. These seasonally adjusted, not seasonally adjusted ones are 11211, -1. Oh, so not seasonally adjusted, it's -1, but seasonally adjusted adds some points in there. Interesting. So there's many ways to look at all this stuff. Anyway, it's not that bad. 2.5, 2.4, 2.6, 2.7. A percentage point either way isn't going to be the end of the world, but everybody's going to believe you at it, want you to believe that it is. And so not seasonally. Okay, now we're into food and energy. All items less food and energy. And anyway, we're not going to get into a complete analysis of this because that would be like a 2-hour-long video. All items less food and energy, seasonally adjusted. 3.3, 3.3, 3.3, 3.3. So when you take food and energy out of the picture, it looks to be a little bit higher than when you include them. That's weird. That is weird. You're saying including food and energy makes them lower? Maybe it's the energy that's making it lower. You wouldn't think it would be the food. So all items less food and energy, not seasonally adjusted. 3.3, 3.3, 3.3. Down from the incredibly high numbers it was before. And down from last year. So we're just kind of hovering here. A point either side doesn't really make any difference to me, even a couple points, because I know, as you can even look at back in 2018, it goes up maybe and it comes back down. Doesn't mean it's just going to keep going up, keep going up, keep going up. Now, how you get to this chart, let me show you that. You go to the Bureau of Labor Statistics webpage. You click on this menu button here, and you pick Consumer Price Index. And then from these choices here, you go to CPI data. And I think when you click that, then you go to databases right there at the top. Go to databases and it will take you to this. Pick this green one screen magnifying glass thing for whichever one you want, but I chose all urban consumers, the top one, the first one. You got urban wage earners, urban consumers change CPI, I'm not sure what that is, and then an average at the bottom. And you have all these different choices. If you wanted to look how I did it, you pick the green one, the green button right there. And then that takes you to this page. And you click on View Items within an area. Select the area. I selected U.S. City Average, but you have all these choices you can pick. A plethora of choices there. I picked General All U.S. City Average there. And then you choose the items that you want to search. And when you click on one of these, it'll open up another pop-up that has little boxes you can check, because you can check as many of these as you want. Now I chose at the very top, look at all those choices. There's a lot of choices. Broken down into all frankfurters, lunch meats, lamb and organ meats. You can break it really, really, really down. I chose all items. And then I also chose, you have to scroll all the way. It's really, really hard because what they show, like on Market Watch and whatever, and what they report usually are the all items and then all items less food and energy. So if you want the all items less food and energy category, you have to scroll all the way to the bottom and then scroll up a little bit. They hide it here. There's all items less food, shelter, and energy, blah, 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 blah. All items less food and energy is right there. So, I guess it's alphabetically here in a different section. Starts over here with A's. That's weird. Oh, you know what? I don't know how they do this. They have other, and then they have A's. There's some sort of method to their madness. So I chose those two. And then here you can click on whether you want seasonally adjusted or not seasonally adjusted, or both. And then and then you click add to selection. Those choices will appear here in this box right here. Watch, I'll do it. And then it adds all those selections there. And then you click on get data. And then it'll open up another tab and show you what I showed you. But there's one more thing, because then when you do have these tables here, it might just give you these numbers here, the month-to-month numbers. If you want the year-over-year averages, like in this table right here, you have to click on get more formatting options right here. Click on that, and then you have a choice here of checking 1 month percent change and 12-month percent change, and other choices. You can, we can include graphs too. Let's include graphs. Let's see what that does. I've never done that before. And you can select a time frame. And different time periods. So let's see what that does when we include the graphs. So I'm a chart guy. I like. Oh, look at that. So this is all items seasonally adjusted. 1 month percent change. Huh. So now we have graphs here. Well, see, that's nice. Maybe we can draw triangles and parallel channels and do like RSI and stuff of these things. Yeah, so look, everything's going down. It goes up a little bit there. See, look at that. When you look at it like this, it doesn't look that bad. This one's good. This one looks good here. Down, 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 down. That one looks good. Looks good, looks good. Anyway, okay, so that's that. Now, if you stayed this long, make sure. So anyway, if you did stay here this long, you can like and subscribe to my video, to my channel if you'd like. Here's my channel. And you'll notice a link right here, altoira.com, with nothing much else. Let's see. Blah, 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 blah. Oh, here, if you click on description or about the channel, more, you click on more. It says, my Roth IRA is with Alto IRA. And there's the link to that. And I put that, they don't pay me to do that, but they've been really, really good. everything has been really easy with them. Haven't had any problems. I've gotten a response very quickly when I've emailed them, and although I haven't done that a lot, haven't really had any need to. So there's that. If you want to look into getting a Roth IRA, check them out. And I do that because I'm so sick and tired of everybody shilling the other IRA company that's out there. And I had nothing but problems with them. And when I reached out to them, I got absolutely no response. Okay, and I had a terrible experience, and I'm not going to get into it any more than that. But basically, they treated me like shit. And so that's why I have this here. And you'll hear all the other people just, oh, how great they are and whatever, and do this. Like they're the only one out there. No, it's probably more than just these two. But I had great experience with Alto IRA. So anyway, and they use Coinbase, and just like others, Coinbase secures it custodies their assets and everything. It's all the same. So except for they're nice. And aside from that, things are looking good here. We're now $600 above where we need to close in order to form that bullish divergence. We got a half hour left in the week, in the day, and we'll leave it there, see what happens. I got to go, got things to do, and we'll see you next time.